Here this morning. Good morning, everybody. This is the morning show. Spencer, Steve, JC, Rick running our charts. A lot to discuss. Look at that. Energy, Latin America, energy, Latin America, Venezuela. We'll talk about it. We'll talk about it's not about the news, right? It's about the market's reaction to the news. So let's get into it. We're going to have Matt Warder stop by a little later on in the show just to give us his take, because he knows more about this stuff than we do. We'll have Jason Purrs. Great day to have Jason Purrs on the show and talk energy. And then that's the plan. We are so back, Brian. That's right. We are so back. Are you guys ready? It's going to be a good day. Let's go.
Woo! How about that?
Good morning.
My wife was asking me if Navy SEALs got the Venezuelan guy. And I was like, I don't know, but probably, right? Like, that's who they send, like Bin Laden style? They send, like, the best of the best, or no?
I assume so.
It wasn't them.
No? It wasn't Navy SEALs? It was just like regular police?
No, it wasn't. Yeah, it was the police.
Had to be, dude.
It wasn't the most badass guys who went in there and got him?
I'm sure it was. Whether they're SEALs or part of another, division of the military, I'm not sure. But
you got to get your best guys in there. I don't know anything about the military. I kind of wish I did. I'm interested in that sort of thing, but like I'd imagine. But my wife asked me, I was like, I don't know.
It's definitely the best planes.
Chat's on my team. They're saying it was the Delta Force. So they're all elite. Who are we?
Yeah, I'm supposed to know what that means.
All elite. I don't know.
It was like the Tom Cruise guys.
For me, the Delta Force, that's what it's called. Is that the?
Yeah,
that's the ones. It's the guys who fly the planes, right?
Is that the thing with Steve Carell?
It's the Top Gun stuff.
No,
Space Force, right? No,
that's Space Force.
Oh God,
no.
That shit sucks.
Dude, the moon was dope this weekend, huh?
Jesus Christ.
Huh?
The moon was dope. It's a nice moon.
Good moon?
Yeah. There was the moon in space. There was the moon in BTC. A lot of mooning.
There you go.
Good mooning.
The bonk was moondogging it.
Dude, Pepe the Frog up 75% year to date. Jeez Louise. Talk about a bellwether leader and outperformer.
The meme coins are back. It only took 3 days.
Wait. Dude. I got an email from Louis at 5 a.m. that said meme coins are never coming back.
I guess.
I don't know,
mean,
man.
Listen, correct me if I'm wrong in some of these meme coins. And just historically in markets, TradFi or otherwise, the biggest moves come in the worst markets. Look, I've got the Stock Traders Almanac right here. Shout out to Jeff Hirsch. And if you go to the back of the Stock Traders Almanac, you got like the best days ever, the best weeks ever, like all that stuff. Like they always have it, right? And what you'll find is that the best days ever and the best weeks ever are in the worst markets ever. Right? Go back and look. You'll see. Yeah. So that's classic. The biggest moves happen in downtrends. So if you catch them, 75%, Pepe the Frog, fucking 4 days.
Okay.
They say Cuba could be next, JC. You hearing that?
Oh, we're not even going to go there. It's complicated. What do we say we talk about markets? We got things moving. Nasdaq's up 2/3% this morning.
And importantly, you have things not moving that some thought would move, but let's talk about it. Let's talk
All right, Dow Futures doing nothing. Starting out the year here, because to me, this is the start of the year, right? Can we all agree on that? Like last week was like kind of like what's the pre-roll that they play like before like the movie starts, that's kind of just the warm-up, the amuse-bouche, just to get the beak, wet the beak a little. The market opens today as far as I'm concerned. You got the Nasdaq 100 up 2/3%, 169 to the upside. You got S&P 500 futures up 1/4%, 16. What is that? 69.18. Am I seeing that right? Man, When you got to look twice, I'm like, man, so yeah, 69.18. All right, shout out to the S&P. We got 30-year bond futures doing nothing this morning with the Dow, 115 for the ZBs, and then crude oil. I don't want to dive too deep in it because we got Matt Warder coming in the house today to talk about all this Venezuela stuff and crude oil and energy and what it means. But crude oil up 1%. They were telling me it was going to gap lower. I think technically it did, and then it came back quickly. So that's interesting, pushing 58, up a full percent this morning, crude oil. Copper up 4%, 592 for copper. Wow, 592 for copper. Wow, these metals are really moving. Gold up 2%, 44.20, up 90 points this morning. We got us silver up almost 6%, 75 and change, up $4 an ounce for silver this morning, with the VIX still above 15. How is the VIX still above 15 with all this winning going on? That's it's really something. What about funny money? Speaking of mooning, 92,600, up 1,130 points this morning. BTC up 1.2%, 92,630. You got Ethereum back above 3,000, 3,150, up slightly this morning. You got Solana. The big moves are over the weekend. You got Solana 133.80 flat this morning, with the total crypto market cap, Mr. Spencer Israel, 3.11 trillion. That is the highest market cap in almost a month for crypto.
So Bitcoin, despite maybe it's not great this morning, it's been up more than 3% over the weekend. Ethereum only like 1%, and Solana
that much.
Solana a couple percent itself too. So you're seeing like Coinbase react higher, even MicroStrategy is going up this morning. A lot of the Bitcoin miners looking better. A lot of these treasury companies. Biminer had a huge freaking day on Friday.
Fartcoin up 60%.
What's that?
Fartcoin 60%.
Yeah, Useless was up like massive. I mean, the ones that got hit the most are Dead Cat bouncing like in a wild way.
All of them, yeah.
But yeah, look, that's the kind of action that you want to see if you're bullish crypto and you have positions in any of these tokens, even the big boys. Right? You want to see
Harry Potter.
You want to see that risk appetite and that kind of risk on price action where the altcoins are actually moving higher faster than the blue chips.
Do you want to just talk about the initial reactions to the Venezuela stuff from over the weekend?
I'm being told it's too controversial for us to talk about. I don't know what's controversial about it.
Who says it's controversial
at all?
Who says it's controversial?
Well,
what's controversial about this?
I think, to be frank, anytime the U.S. does a military action in another country, it's probably controversial to some extent, right?
That's fair.
I think we could
But
probably agree on that.
Yeah, but for us, we're more interested in the market implications of something like that, right? So like none of the three of us know what any of this stuff is, or who's in charge, or who's running anything. Who the hell knows, right?
You know what I mean?
I'm more interested in what the sentiment was versus what price is doing. And for me, like my observations as somebody completely ignorant to all of this, well, I'll talk to Matt Warder today about it, but it seemed like that was the initial was bad for stocks, bad for oil, right? And bad for Exxon and bad for energy stocks. That was like the sentiment that I saw. I don't know if that's right.
Wait, bad for oil. No. Bad for oil supplies or bad for the price of oil?
Bad for the price of oil because of the excess oil supplies is what I saw. Again, we'll talk to Matt about it.
Yeah,
I thought the sentiment was bad, and then it reacted positively. That's how I saw it.
The sentiment could only be good for U.S. oil companies if you listen to Trump's press conference and what they said there. So we'll talk to Matt more about that. But Chevron is one of the largest producers in Venezuela. They are responsible for like 25% of the nation's output now. So they're already built out there with all the infrastructure to kind of take advantage. This is going to become a money grab, the oil situation there.
Well, and Chevron's up 6.5% this morning, and Exxon is only up, well, it's up 2.5%. So
Chevron,
big difference.
Exxon withdrew from the country many, many years ago, and were due a large fine from the Venezuelan government that was never paid. So now Trump said they're all going to get paid on these fines that, Venezuela kind of screwed them on. So that's why you're seeing certain stocks like Exxon, who now today actually have, I think, no operations. Exxon,
they don't.
But I think they will soon, and at least they're going to get paid on this fine, which they probably wrote off on their books. So that's just new free money.
OIH is up 6%. Oil services.
They had operations. I think Maduro nationalized them, so basically just took.
Here's
them
another
Exxon's
interesting
like, peace, we're out of here.
Right.
Look at the interesting
It was like a
divergence here.
breakup fee.
Similar to the 6% move in Chevron, 2% move in Exxon, you're seeing a 6% move in oil services. You're only seeing a 2% move in the explorers and producers.
And I think for energy, it would make sense to think short-term disruption, probably good for oil prices, but longer term, it will mean more supply. So how that all shakes out, we'll see. Action looks pretty encouraging this morning. In
Throw
both
up
the
slide
futures
3 just
and the stock
to
market.
just to close out this conversation. We'll move on.
What it really means is that our energy calls are now in the money. That's what it really means.
Yeah, I'm happy
Right.
about that. Yeah, I'm not upset. I'm just wondering if it's sustainable or if this is the knee jerk, right? So
Yeah.
this is what I see. I see ExxonMobil. This is coming into this scenario. So clearly somebody knew something. You know, you don't have a lot of energy stocks that look like this. I could tell you there are 0 energy stocks that look like this. Do I have that right? Is that
Yeah,
accurate?
this one.
Is the answer 0.0, Mr. Blutarski?
Yeah, it's my favorite. Love it.
Energy stocks
And
don't look like this.
so this is really, so from a chart perspective, from a purely technical perspective, we've been looking at these charts, right, Jason? And get up the volatility compression look. We've been looking at these charts and saying, big move coming for energy. We've been in a 3-4 year range coming off of one of the most epic rallies in the history of energy stocks, right? So all that built up energy, which direction is it going to go in? I think today, if this kind of action sticks and follows through into the end of the week, you have to start to think that's the starting line momentum. And the market is choosing its direction. We're going higher. So that volatility compression finally coming off the floor, you're going to get an expansion phase. So this indicator tells us nothing about the direction that we could expect it to go. And we have to use other tools to figure that out, like the underlying trend and the massive base breakout that's about to print on this momentum surge. I think we're getting our answer that direction is going to be up. I think it's going to be up in a big way.
Well, I agree with you, Strazza, here on the direction and the likelihood. The Julie 7918, this Julie over here, says this is a sell the news event for Exxon. I think that's a good point because that's what I wonder. Is this a sell the news event for Exxon? Is this not it? Because think about what the implications of Strazza being right are. If Strazza is right, and this is going to break out, and Chevron's going to go, and Exxon's going to go, and XLE is going to go, the implications of that are that bonds are going to fall, and you're going to have a new leg lower in bonds. Those are the implications. Tell me I'm wrong, Strazza.
I'm not overthinking the rates and energy thing, like everybody
saying,
else.
If you're
I'm
right,
not.
and if you're right, I'm going to make a lot of money. So I'm not like betting against you here. I'm just bigger picture. Let's take a step back as we enter the new year. If you're right and energy has a big move, bonds break down.
I don't know.
Saying.
Maybe not. I mean, the 10 year's not breaking out today with energy.
It's not doing anything.
Right. Exactly.
And interesting, funny, bonds and interest rates are doing nothing this morning, which is interesting in and of itself. But the stock market is reacting accordingly. Stocks are up in a boring bond market tape, right? You see that?
If this relationship was, so strong, you would think on a 5% up day for energy stocks, rates are moving higher, but you're just not seeing it. So we'll see.
Just to finalize that perspective, ExxonMobil's a $530 billion company. Chevron is a $330 billion company. So $200 billion more market cap out of Exxon. Conoco is 126. Williams Companies is 74. Schlumberger 65. Kinder Morgan 62. EOG 58. Phillips 66 is 55 billion. Valero's 55 billion. And Marathon Petroleum 52 billion. So those are your top 10 right there in terms of energy. When you compare that to, say, the technology sector, its components are in the trillions of dollars. Energy has nothing anywhere near that.
They've already come off in a big way, these energy stocks, just this morning. Like last night, Chevron was up like 11% on the Robinhood app.
I'm talking the Julie point about this is a sell the news. That's what I wonder. Is this that? So
I think it has legs.
All right, I got a good one. You know how much I hate controversial stocks. I got 3 good ones here. Nike. Let's start with Nike. I don't know. From my ignorant perspective, I see. Everybody thinks they went too woke. They got punished like other overly woke overly woke stocks and all that stuff. And now they're at the point where now you could squeeze. You could squeeze the righties that or overstayed their welcome on the shorts, maybe,
Wait a minute. You saw that Maduro was captured in a Nike tracksuit. That's what you saw, right?
That's hilarious. I did see that, actually.
Yeah.
Everyone was talking
tweeting
about that.
Yeah.
That's funny.
Yeah.
And they even showed like the model, like in the online store, wearing that same, Nike jumpsuit. Is actually really funny. If you can pull that up, somebody find that, put it up. But here's Nike. So fun fact, Strazza. Very similar situation to United Health. Remember when I came on here saying I was buying United Health, Leaps, and then a week later, David Tepper and Warren Buffett both announced that they did the same thing and we got super paid. Remember that?
Yeah.
United Health was retracing 61.8% of the entire move off the 1987 all-time lows, right, to the all-time highs a few years ago in whatever year it was that United Health made the all-time highs, right? And it rallied from there. Nike's doing the same thing. Yeah. This is the 61.8% retracement of the all-time low in 1984. It IPO'd in 1980, sold off Facebook style, bottomed out in 84, right? Broke out, and the rest is history. That peaked 4 years ago. The 61.8% retracement of that entire move is right here, 68.5.
It's a big level too. like you have it marked up. You could see, prices have react here over the past decade.
It's not like a random level. Number one, that is mathematically a significant level, and then the market is agreeing, which is the more important part of it, right?
So the CEO of Nike came out. Maybe throw up the hot corner chart now. The CEO of Nike came out and bought like $1 million worth of stock, and he just doesn't want Tim Cook showing him up. Right, because Tim Cook comes, drops a couple milli on Nike. Nike's all over the news last week, right, for the big buy for the Apple CEO, who's a director on the board for Nike. And then everybody's sitting there saying, well, when's the last time leadership actually bought their own shares? And it's like, hey, fucking never. So about time. Good for you, Nike CEO. But that's all this is, by the way. Dude got shown up big time.
That's hilarious.
Yeah.
So, I mean, that's the level, 68.5. If you're above 68.5, you flip the book long. Tell me I'm wrong.
Yeah, 100%. And I would love to see it because...
Great American brand.
Fuck you. But yeah.
It's a great American brand.
Well, I mean, it is.
Yeah, took the words right out my mouth, buddy. But
I know you too well.
Lululemon's bottoming up nicely off of its, lows here. Had a nice little island situation there, popped higher recently. So maybe some of these banged up athleisure brands are coming back. Just ask Jeff Mackey. I mean, they all come back. Shout out Victoria's Secret, Levi's, Abercrombie and Fitch. They all come back. Nike's coming back one day.
To the point of the chat, if this was if this was closer to Halloween, sales of that Nike outfit would be off the shelves. Right, because that would be like the popular Halloween outfit, is dressing up as that guy, because it's a comfortable Halloween outfit and it's timely. But the fact that it's January, it's not going to work in October, right?
You're right about that.
So that's why Nike stock is barely up today. But if this was September, Nike stock would be ripping.
Okay.
They should hire Sydney Sweeney, but they won't. They won't.
Dude, there was a
I don't know.
It was so funny, dude. It was all of the news, which I thought was really interesting. It was all of the news. Do I have it here? Yeah, I have it here. It was all of the news. I'll show it now. Here, put this up, Spencer. It was all the news that throughout the year. And it's just kind of all the topics. And then when in the year it was being searched the most. I just texted it to you. Oh, I just slacked it to you. So put that up, Spencer. And the funniest part is that in that line, right?
I've seen
it says in that line, it says inflation and Sydney Sweeney are right next to each other in the topics.
Fantastic.
Oh my God. It was perfect, dude. It
was a huge story. It really was. What were the other big stories?
Here. Put it.
Yeah.
I'm just gonna put it up.
I got it. Yeah, slide 2.
We should do more fun stuff like this for our year-end shows,
Oh, I know, but I don't normally see this. This wasn't by design. I just thought it was cool. Zoom in there so you could see.
Yeah.
So this is from left to right. It's the beginning of the year to the end of the year. And then the size of those mountains, if you will, are how much search it was, right? At that time in the year. So if it's in the middle of the chart, it's the summer. If it's to the left, it's January, February. It's to the right, it's more recent. That's why the line goes from the upper left to the lower right.
So the searches with the most staying power are Labubu and inflation and K-pop demon hunters. Those are the big. Looks like the big three for the year.
That's
from
crazy. That's crazy. The staying power of the Labubu.
Yeah, no kidding.
But look at Sydney Sweeney and inflation right next to each other. Just thought that was hilarious.
Yeah.
And then Jerome Powell right above Sydney Sweeney. Shout out to Sydney Sweeney.
Oh, Jerome
we gotta get her on the
Powell.
show.
Jerome Powell, yeah, around July, August. Yeah, wow.
Wow, remember Doge? Seems so long ago.
Sydney
Why is
Sweeney's
Greenland
been emailing us to come on the show, and we just don't have time to fit her in. We got to figure out a way to.
No.
We'll make some time for her. All right. Hard pivot. Ready? Slide 6.
Okay.
We talked about this recently, but man, this is a really powerful base. Like when we talk about the Exxon base.
Oh, so good. Oh Jesus, really? We got to do this again.
They're a video game. Hold on, they're a video game company now.
Oh, Comcast finally spun off that company today.
Yes, VSNT. VSNT is the ticker. Yes.
Is that French? Are they French?
Must be French. Okay.
So VSNT is what? A Comcast. What's in that?
CNBC.
Just CNBC?
No, not just CNBC.
Is it NBC Universal?
I don't know anything about it. I think it's all a bunch of television brands.
It's CNBC. It's the company formerly known as MSNBC. It's
what are they called now?
MS Now. It's all the cable TV channels that nobody watches. It's like USA and the Golf Network and
how much Golf Network are you watching, Strazza?
I don't know.
It's actually a great channel. So maybe I'm the only one who watches all of them.
I can't believe you feel that way.
Yeah, it is. It's really good, actually.
How many hours a week are you watching the Golf Channel?
Like not too much, but I played a lovely round of golf this weekend. Shout out to my good friend Michael Morcos. Just fantastic. Really nice. Still can't putt though.
All right. Anyway,
hard putting on the really good greens, like when you play bougie courses. Like, dude, who can make these putts, man?
It was terrible.
Dude, it's crazy.
3-putt and everything. Yeah.
All right. So that's media. New York Times breaking out to I would love to know the percentage of the company that's video games versus journalism or whatever.
Well, look, I mean, I said last week, this is no longer a newspaper company. They haven't been for some time. They just sell subscriptions.
But they sell subscriptions to a fucking digital newspaper though. It's still a newspaper company. They're just selling subscriptions of newspapers. No, it's not like they own like television channels.
No, but like they're doing this hard pivot into games, as JC said.
Seriously?
I mean,
they own like Wordle, right?
Yeah, which I still play every day.
Yeah.
Do you really?
Oh yeah,
I played every day for like 2 weeks and never played again.
I still play.
It was super trendy for a while.
Yeah, it's very like mind. It's good for the mind. It's good for the brain.
Yeah, it makes you smart, Spencer.
It's like Sudoku. It's like the Sudoku of its day.
It takes 30 seconms to play.
It's mental exercise.
Yeah,
I'm glad you have time to do that.
Yeah.
Yes, I have time to do that.
So am I getting cue here in slide 7?
What is this?
This is you guys checking up on me, making sure I'm all right.
I have the same putter as you, Riley, and I swear it doesn't work.
Yeah, it's the putter's fault. It's the chart's fault I lost money. It's the chart's fault. It's because of the chart.
Oh, I like this, JC. I like to explain what you're doing here.
Am I getting cute? This is a weekly line chart of Bitcoin going back to COVID, the COVID post-COVID peak.
Still need a little more mo off this low, right? Don't you think?
What do you guys think?
I like this. I'm into it. What's the level here? Did you just play the flag, right? So if we're breaking out of this little consolidation, you just use the pivot highs from earlier in December or late November? Is that it? What we do here? I like the way you're looking at it because it's showing the structure. We're in a nice uptrend.
It's a zoom out. It's a zoom out
continuation pattern. What?
It's a zoomed out look. That's it.
Yeah, it's great.
Zoom out clean, right? Weekly closing prices of Bitcoin. Like, how many people out there are looking at weekly closing prices only on a line chart in Bitcoin? Come on.
Not enough. So I was
kids these days with their candlesticks.
So Bitcoin is in a roughly, or was in a roughly 30% drawdown from the highs. It's obviously repaired some of that now. I was looking through some of these tokens that you were shouting out earlier because there was huge momentum in them back on Friday. So I was charting out these meme coins and altcoins dude, I'm telling you, for the first time in like a year, I've looked at these things. And the drawdowns in something like Bonk or Pepe or Peanut the Squirrel are, they're insane. It's like the kind of drawdowns that's it kind of thing. So I think
I just got to tell you how
trends,
happy I am that
What?
Steve Strazza is giving a shout out to Peanut the Squirrel.
I mean,
I love you, Strazza. It makes me
but
it warms my heart.
look at something like, I'm not kidding, something like Shiba Inu was just in an 80% drawdown.
Preach, brother.
That's the game, man.
So it's fine that Bitcoin's only down 30%. If the altcoins turn here, first of all, that was enough. They were totally washed out. Bear market, was pretty nasty over there. And then you have to look at Bitcoin, Solana, and Ethereum and say, those drawdowns weren't so bad. That's resilience. That's relative strength.
Dawson in the chat making a great point. JC kept changing the BTC chart settings until something looked decent. You're not wrong. You're not wrong.
We could do that.
You're not wrong. Shout out to Dawson calling me out. See how you guys keep me in check? I appreciate that. You know what I'm saying? I don't need any more yes men. I got enough of those. No, appreciate you, Dawson.
Dawson is calling today Energy Day, and I like that. I think this is a big energy day. Shout out to all the U.S. oil and gas companies that everybody thought were dead forever. I think a brand new upleg is underway. That volatility expansion is coming, and it's the blue chips. It's the big boys, right? Exxon, Chevron, Conoco. Those definitely going to be involved in whatever goes on over in Venezuela. And then the refineries. If you look at a map, they're going to ship that gas probably right back over to Texas on giant tankers, and it's all going to get refined over there by the big services companies. Look at something like Slumberburger, up like 10% here today. This is starting line momentum, and some of these patterns
are in the Slumberburger.
Some of these patterns are resolving now. I think there's room to run here.
Couple things. One, I don't know if you can bet. You probably can bet on where markets open on Polymarket, like when they're going to open on Sunday night for the futures. I didn't look over the weekend, but based on my social media observances over the weekend, I would have thought that people thought the oil was going to open at like $65 last night, and nowhere close. We're nowhere close to that. And a lot's been written about that already. That lack of action off the open, and because the U.S. has all the oil, and this isn't actually that big a deal, and this isn't like the 70s, blah blah blah, whatever. Although I also suspect part of it is because this happened on a Friday night. If it happened on a Sunday night, maybe a different story. But Friday night, the news is 2 days old by that point. That's the first thing. The second thing is, this is why I like pre-market activity, because Slumber Jays are big this morning, but it's been trading down. It's been going down pretty much since 9 p.m. last night, like just straight down. And Chevron too, all of them actually, right? So, they're all well off their highs from last night. So that's important. I think that's very important. That's telling.
Yeah,
getting some questions in the chat about whether I'm still buying dick butts. I just shared the link, Spencer. If you could drop that in the chat.
What is it?
That's my OpenSea account. It's all in the blockchain chain. Like it's not like one of these Fidelity Schwab things where like it's your own private personal account in the blockchain chain.
How cool is that? You have zero privacy.
There's zero privacy.
Yeah, why wouldn't you want that?
Oh no, it's not whether I want it or not. It's just what it is,
guys. Yeah. You
can. Totally. I mean, there's ways you can hide it, but I got nothing to hide. You want to see what's in my NFT portfolio? Knock yourself out. Like whatever it is, what it is. But it's all there on the blockchain chain. It's been there all along, right? It's crazy, but there's good data there that you could see in bigger assets. I mean, this is not a small asset. I mean, you're talking about billions of dollars. Like these are mid caps, large caps, at a certain point. The transparency in the bigger ones where you could see the realized gains and losses in Bitcoin, and Louis talks about this stuff all the time. You can see what's in these wallets. You can see the most successful wallets ever. Accounts are called wallets on the blockchain chain. So you could see the most successful ones ever. You could track what they're doing, right? It's all there, right? You don't necessarily know who it is. In some cases you do, but not in every case you know who it is, but you don't need to know, right? Just look at the success.
Yeah, and then so Richard, again, it's actually not pronounced Schlumberger. We know this. We talk about this on here all the time.
It's the old Slumberger.
Schlumberger. That's how you say it, actually.
So,
Thank
you know, if you, I've gone to India a whole bunch over the years, and on multiple occasions, I've had the opportunity to visit Dharavi, which is the biggest slum in Mumbai. I think it's the second largest slum in the world outside of, there's one in Brazil. And, you know, it was such an amazing experience going through there, you know, seeing, you know, these are the happiest people I've ever seen in my life. These people were so happy. It was fascinating. And, you know, just the way they recycle all of the, you know, materials from all over Mumbai and bring it in there and separate the plastic into little pieces and then melt it down and build new things. Like, it is one of the most fascinating things ever. If you ever get an opportunity to be in Mumbai and you could take a tour of Dharavi, which is the big slum there, you could really, it's crazy. It's wild. Very, very impressive. Highly recommend it. Super safe. I never felt unsafe at all. Quite the opposite. You know, everyone was so friendly, like insanely friendly and so nice. Very, very interesting. I'll get you we'll share it on the show notes. I'll get the link of the organization. There's a non-for-profit that'll take you through there. It's one of the ways they raise money.
Sure.
I'd love to do that in Brazil, but I don't know if it's as safe. Maybe I'm being ignorant. I don't know.
I got nothing.
You're more of a world traveler than us, so I don't know.
Not these days. Not
Anywhere
these days.
could be unsafe. And a lot of unsafe places, there's ways to travel to them safely and more responsibly.
Everyone tells me New York is unsafe.
It is.
Manhattan is I feel so safe in Manhattan. It's
That's
joke.
your problem.
Other boroughs, it might be a different story, but in Manhattan, I don't feel unsafe ever. And I lived there for over a decade. I never, ever was ever in a situation. And I was certainly in positions to be unsafe. You know, I wasn't exactly in the nicest, you know, you're down on the Lower East Side at 3 o'clock in the morning. You know, is that the safest place to be? Probably not. I never had any problems.
Is there anything this morning in the defense stocks? I saw a couple European ones with trading.
Stocks again.
Yeah, it mostly European defense, not American, defense. Right?
I don't get it. Not really interested. I think, and the real story too, like we're talking about the muted action in crude oil. The real story is copper this morning.
Yeah,
right. You get the big reactions in copper.
Big moves. Big moves. 4%. Big
level. You got big bases in that space too. I mean, you know, the metals are looking great. It's just commodities at this point. It's all of them. Agriculture's probably next.
All right, because we got Warder, so I want to dive into what's going on there. We got Alfonso in the house as well for some color on you know, on boots on the ground sort of thing.
Yeah.
Let's talk about what's not working. Throw up slide 8. Boom, 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 boom. This is a great chart. Shout out to me.
Funny seeing how all the people who aren't overweight energy talk about how this move's probably going to fade.
I wonder if
Steve. Steve, so far they're right.
Yeah, fine. Let them
dance. Mark hasn't even opened yet.
These are giant companies.
For 25 minutes.
5, 6, 7% overnight.
Right,
like fucking Jesus.
Look,
you Jesus.
How do you feel about that?
More of the same, right? Can't own these things. Can't own them, even the little ones. Terrible.
Russell 2000.
Think about what the implications of that are, though, right?
That Celsius looks good, though. I'll tell you, that Celsius. Ooh, the memory.
I'm trying to think of an example of a small cap consumer staple company, and I can't.
Like cereal makers. There's a lot of like little junky ones that make like
there's Cow Maine Foods,
coconut water.
Right.
Cow Maine is a small cap.
Yep. There's WD-40.
WD-40. All right, you got me.
Isn't Vita Coco one? Coco.
There's Anderson's.
Oh, Beyond Meat's probably in here. I bet.
Coco. Beyond Meat stuff. That's discretionary. Okay.
Sure. Okay.
Reynolds, like the aluminum foil.
No, it is defensive. Technically, Spencer, you're right.
Like Reynolds wrap.
Okay. All right. Fine.
Like post cereal.
Yeah, like food companies and stuff like that. But the point is that in healthy market environments, go back and look. I highly encourage everyone to go back and study bear markets and bull markets from the past. You know what you find? You find that consumer staples tend to outperform in markets where stocks are under pressure, right? They're defensive. And then flip that on its head in healthy environments where tech is working and financials are working and industrials are breaking out and sector rotation and like, the hell do you want to buy, a grocery store for? Like, what do you want? You want to buy tech, software, semiconductors, banks, right? Like, things are good. Like, engineering companies and machinery and all that shit, right? You don't want consumer staples, and that's how the market works. So the fact that staples are making new lows on a relative basis is indicative of a healthy market environment. And the reason I think this chart is so good is because, we normally talk about that at a large cap level, right? Talking about large cap staples relative to the rest of the market. And certainly it's been a massive underperformer. It's a healthy environment, but you're also seeing it down the cap scale, which is my point. I don't think we talk about this enough. I don't think anybody talks about this, but here it is right in your face.
It's bullish. It's bullish.
Right. So if you're bearish, if you think the market's going to crash and house of cards and blah, 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 and, government debt, and you're one of those, you want to see this line start to go up at some point. And as the great Luis Yamato always says, it's got to stop going down before it can start to go up. Right?
Yeah, but you don't actually want to own this stuff, though. Even if
for me, it's not about that. I mean, maybe we can own it like in a more defensive environment. Sure. Strazza YOLOs Philip Morris and shit like that. Like, you know what I'm saying? We get down with the staples. It's just not in healthy environments.
It's been a tough place to kind of put trades on. We've dabbled there. We try to put some on here and there in defensive groups, and they haven't been great all of last year.
It's a raging bull market. Why would staples be doing well?
And Tommy, you can wait for them to break out of these big bases, but I'm already in and have been in and will be taking early profits on today's action. So, we can all do our own thing here. I'm not going to wait for them to break out of these big bases. I'm going to anticipate the moves. So I'm good with my overweight energy.
That's what you do. And that's not necessarily better or worse. That's just what you do and what you're good at. For other people, they'd rather pay more and wait for the breakout. And that's fine too. And I'm more like that also, by the way. I mean, I'm in energy. It's not like I'm not in energy, but generally speaking, I like to pay more with a higher probability. Strazza would rather pay less with a lower probability, and that's fine.
Yep. That's a good way to
that's
put it.
Right.
I like where your head's at, Billy Cunningham. Yeah. This is probably a long-term trend.
How about this one? How about slide 9? We haven't talked about this at all. Talk about the stick on Friday. What a stick on Friday by the industrials. Holy cow. Look at that daily chart on the industrials. Here's a weekly showing a new all-time weekly closing high. But that daily stick.
Do you have anything to say about the strangeness of the tape? I was exchanging messages. We had a quick discussion about it. But Friday was a bit weird, was it not?
And what did I say?
Don't overthink it. I think you're right. Yeah, just, industrial.
It's a weird day, bro. It's like it's the Friday between New Year's and then like the first Monday of the year. Like it's like the weirdest. Don't overthink it.
They killed software stocks and semis were screaming higher.
Yeah.
Somebody
was getting squeezed out there. Something was going on. Some funky low liquidity dynamics were happening there somewhere in Greenwich, Connecticut.
And I'll tell you another thing about Friday's action. Go look at energy stocks. They never dipped. They were steadily moving higher all day with volume. So I know this is some top secret operation, but tell that to the market action on Friday.
Yeah, that's right.
It sure looked like somebody knew something. We were trying to get into like Schlumberger calls. We wanted to add more exposure to energy on Friday, actually, but they never dipped. They never came in the whole day, just stair-stepping higher. So shout out to whoever made that trade.
All right, I got one for Strazza. Strazza already loves me, but he's gonna love me more now. Throw up slide 11. This one's for you, Straz. This one's for you, buddy. I look out. I look out for you.
Can't wait to see it.
I look out for you.
What do we got? Chart on. Nice cup. Yeah, man. Big day. Speaking of the price action on Friday. Yeah, China. Hello, China. Hello again. Ooh, love to see it. Real big fan of this. One of the best bases, internationally speaking. One of the best.
I figured you'd like this one.
That was on the Baidu headline overnight, right? That they're spinning off, right?
I guess, but that's one stock. I mean, yeah, sure. The price action at the index level for China was overwhelmingly bullish Friday, but it wasn't just Baidu. Baidu was up a bunch. We recycled some of the profits from Baidu, put them right back into some new China trades.
China down 1% this morning.
Yep. Well, that's in relation probably to the weekend news, right?
Really? So this is good for U.S. stocks, bad for Chinese stocks?
Well, I don't know. There's a thing there. There's a situation there.
Yeah, I don't think so.
I think so. That's what I heard.
I don't think that's a thing.
I heard on Fox News.
Oh, well, it must be true then.
I'm kidding. I'm kidding.
JC, before we bring
Zero
on
news about it.
JC, before we bring on Jason Purz, you want to just preview the call tonight?
Yeah, so we'll be talking about, listen, for me, the cheat code in this market is to understand that asset prices trend, right? Like there's so many things about the market that we don't know, particularly about the future. So I think it's more important to focus on the things that we do know. And we know for a fact that asset prices trend. We have the data for 100 years. We have the math. We know it's a fact. So if we know that, then it would be very advantageous to be on the right side of trends. And to me, there's no better way to recognize the direction of primary trends than to take a step back and zoom out and look at the bigger picture trends, because those are the most powerful forces in the market. And at the end of every month, at the end of every quarter, technically at the end of every year, but I'm more of a month and quarter kind of guy, you can take a step back and look at that smoothed out data, and it really brings you back home, right? It really, oh shit, yeah, that's still trending higher. Oh yeah, that thing still sucks, right? And then so what charts are we looking at? We're looking at all the major US indexes. We're looking at international indexes. We're looking at all of the sectors. We're looking at the bellwethers of this market: Apple, Microsoft, JP Morgan, Freeport-McMoran, Caterpillar. These are the companies that are driving the sectors that are driving the overall market. We're looking at, all the different countries around the world in Latin America. I mean, freaking Poland was up 85% this year. Peru, Chile up like 70%, 60%, something crazy. Latin America, 50%. China up a ton. Germany, all these European nations. Poland's up 80-something%. All these countries around the world doing very well. In Africa, they're crushing. They're crushing it in Africa because they got all these mining stocks. They don't have massive social media conglomerates, right? They dig holes in the ground and look for rocks. And that's really been working. So, my best metals companies are not in America for a very simple reason. Not because I'm some like metals expert, international explorer. It's just America don't have those kind of companies, right? There's one gold stock in the S&P 500, right? So in other countries, they have a lot more of that stuff because they don't have the other things that we have, right? So anyway, that's what we do. We take a step back, we zoom out. I'll see you tonight.
All right. 8 p.m.
And you're seeing bullish action in those groups today that's booing these international country ETFs, emerging markets up big because of this theme. Up big, really nice.
For me, that's
Latin American stocks.
It's my favorite thing to do. As far as my work is concerned, there is nothing that I do at all by a long shot that adds as much value to my process as this. I'm telling you.
All right, we got pros in the house. Let's bring him out. Now we're gonna get into the nitty gritty because Jason will come on and talk about commodities, and then we'll bring on Matt, and then it's gonna get good. So, Jason, you here? I hope so.
I love it. Very commodity. Mr. Jason Purz, how are you, sir?
I'm good. We should always be talking about commodities every morning. I love it.
Well, in a commodity super cycle, perhaps. Listen, can you stay for Matt Warder?
Yeah, I'm down. Yeah,
nice. Yeah, great. Because you guys speak a more similar language than we do. I'm looking at more from an equities perspective, and while you do look at it from an equities perspective, it starts from the futures, and I appreciate that from you. So you tell me. I thought people believed that oil was going to open down on Sunday night and it was bad for energy, and it still might be. I don't know. But so far, it's been the opposite. Crude oil's up. These oil and gas stocks are up. Was my interpretation right, or was that wrong?
No. So this is interesting. So go to slide 16. So I got it all today, JC. I'm ready. I think this is great. Let's throw up slide 16. All right, so let's go all the way back. So let's start out with the S&P 500. If you remember, and you remember this clearly because this is pretty recent history, there was a big CPI report that came out on October 13th. This was the market bottom for 2022. And remember, everybody at that point, inflation was raging and, the market was just crashing every single CPI report. Every single time the market tried to get its footing, tried to make a new high. Next thing you know, you got a CPI report coming out, would smack it right in the face. It kept happening all of 2022. And then next thing you know, October 13th, right on that October 13th bottom, we got that CPI report. It was the worst one yet. Worst rate of change for CPI in years and so on. And it was terrible. But once again, the market bottomed right there. That was the bottom of the next bull market for the until now, really. You know, I guess you could say the one Liberation Day possible. That doesn't really have a feel of a bear market to me, but some people call it that. But really, it's like that's where the market bottomed. We continued to move higher ever since. Throw up the next slide.
I was in the Lowe's parking lot talking to Strazza buying ARC calls.
Perfect. Like exactly. Like that's
that day. I know exactly where I was. Right. I know exactly what I was doing. Who I was talking to.
That's the type of shit like we do, you know, as traders. Like that's the thing. Like that's what makes a good trader or a bad trader. It's like you're a good trader if you can look at the situation. Everything's falling around you. Everybody's calling you saying it's the end of the world, it's the end of the market, and so on. But at the same time, you're like, where's the opportunity? Like there's an opportunity there. That was right there. So I know.
It's funny. I remember what I was buying in the portfolio. I don't remember why I was at Lowe's though and what I was buying there. That's the funniest part. What was I doing at Lowe's in the morning like that? That's so not like me at all.
No, it's I mean, it really says because, you know, when you get those type of opportunities, like everything stops and it's like 8:30 in the morning. It's like the CPI comes out. Next thing you know, the market just starts ripping off that low. I mean, it was hitting a new low that day. I mean, that was a new all-time low, or sorry, not all-time low, but multi-year low at that point. And then it's just rallied ever since. Now we're here, this situation. Venezuela, you know, everybody talks about Venezuela and, you know, this should have been bad for oil. And honestly, like, you know, this could have gone one of two ways. And that's the thing with these news events that you always have to pay attention to. This could either follow through to the downside and then you have this massive downside spike, or maybe everybody's too short. Maybe everybody's mispositioned.
Well, I mean, they're very, very short.
They're very, very short and everybody's mispositioned and the volatility is very low. And what's the first thing, you know, you learn if you read all the Market Wizards books? It's never short a dull market. This is about as dull as it gets. It is boring in energy. There's nothing going on. Everybody hates it. The sentiment is terrible. But next thing you know, you have the news event of, you know, the last few years for oil. Oh, they took over Venezuela. The problem is that, you know, it would take a long time to refine the oil from Venezuela. We don't have the capacity to do it at the moment. Not even the capacity. We just don't have the tools to do it. We'd have to refit most of our refineries to do it, which will happen, but it'll take time. But either way, you know, just looking at the news event alone and saying, hey, you know, Donald Trump could just come out and say, I want oil or gasoline at $2, and it would kick the oil price down. This is huge news, and nothing has happened. So I'm thinking, I'm calling here a bottom. I'm calling a bottom today. You know, I haven't talked about oil at all. I haven't said let's buy it. I've talked about it a bunch, but I haven't said let's buy this thing. Let's start going heavy into oil. This is one of those news failure events. My mean reversion model, I don't talk about this one much. It's just something to basically diversify all the trend following models I run. But the mean reversion model spits out these from time to time. You know, copper, when it had its major sell-off, it said to buy. Today, it's saying this is a buy. If we get a close here, that gets a little bit higher. If we get a strong close, get above that 10-day EMA, I want to buy the hell out of oil. I think it's a good bottoming signal. And also, go to the next one. We also are starting to see XLE. I'm sure you guys talked about this a little bit today. I saw the Strazza indicators kind of showing it. Go to the next chart. Sorry, my bad. Next chart. So if we look at XLE, we're real close to new 52-week highs. And it's going to open above that today. It's about to gap over that 52-week high. And JC, I love a good gap and go scenario. I think we're here. You know, this is a textbook gap and go. I'm sure we'd see a lot of volume flooding into it today from people either panicking in or panicking out. We're going to see probably a lot of volume. If we get a high volume close, we get above that level, it's a great time to be owning energy. So I'm going to say right now, like I'm saying, buy energy above that level, which is going to gap above that today. I'm also going to say oil's looking pretty good. I want to own that as a futures trader. I'm not saying, hey, the trend is up from here on out. I'm saying it's at least going to hit the top of that range again is what I'm looking for. So if you want a good risk to reward opportunity, this is it for the energy space.
You know, when it comes to contrarian trades, right, which this obviously is, you know, I got a good chart, and then I want to make a point. Throw up slide 2. This one comes from Warren Pies, who does great work. And Warren points out the short interest here in the managed money portfolios, and they're very, very short, man. Record oil shorts. And when I see that, I'm like, man, this is setting up. So when I see those big bases that you're referring to, obviously we see it, we've been talking about them, historic, 17 and a half years we're going on energy stocks basing. It's a huge base. You got historic shorts from asset managers, which are historically the worst investors of all time. So you think the worst investors of all time are going to be right here, or you think they're going to be wrong like usual, right? So that's something to think about. And then, I'm like, man, all you need is one magazine cover about oil from The Economist, and it's going to get you done. And I said that like tongue in cheek, like, oh, it can't be that clean. It can't be that simple. But let me tell you something. After the events of this weekend, you don't think you're about to see some kind of oil magazine cover? Right?
It's coming.
It's coming. I could smell it. I was smelling it a couple weeks ago. I said it. I didn't know how. Now it's becoming a little more clear, I think, as to what this magazine cover is going to look like. And if we get multiple, if we get like an Economist and an Economist and a Time, maybe mix in a Newsweek. I don't know. I don't know if we're going to have enough time. But if these things start adding up, you got all the ingredients for one of the greatest moves of all time. I don't know what's going to happen. Could sell off today. This could be a Southern News. We'll see. But, man, what a setup. What a setup.
That's the thing. At the end of the day, it's like, if we see this fall through today, we see like XLE continue to move higher today. We see oil continue to move higher. We get a strong close in oil today. I mean, there's a huge wick in oil. We get a nice hammer candle, or we get a nice strong close. Like, you want to own the shit out of this thing. You want to buy it. Like, once again, it's like, what do we do as traders? Do we look for the perfect setup, fundamentals, technicals, everything has to be perfect? No, that's bullshit. Like, you're never going to have 100% of the information for any trade. It's what's the high probability bet? This is as high of a probability bet as you're going to see in the energy space, if we've seen in a very long time. I want to take advantage of it. I want to buy this thing now.
For me, let me tell you something. I don't think you're wrong in terms of a high probability bet. You're probably right, but that's not the point. It's the risk versus reward.
That too.
That to me is the big one. I'm not saying you're wrong. It probably is a higher probability bet. Fine. Let's say it was a low probability bet, right? The risk reward is crazy.
Yes, the risk to reward is everything, because you're looking at oil just kind of sitting here. If it goes down a little bit, I'm going to be out of the trade. That's simple. You can have like a stop pretty close. It makes a new low, get out of this thing. That's how these type of mean reversion setups work. You don't want to have it really close because you want to give it a little bit of room to dance around, but you want to have that pretty tight here because we're taking a probe here. Like, that's to me what, Michelle Schneider always talked to me about and taught me is like certain trades, like you take these probes. There might be good bets, but you want to take a probe. Hey, this is going to work. Hey, let's try this. Hey, let's buy this. So for me, it's like put a stop basically at those lows that we saw, a few weeks ago in oil. Put a stop there. Let this thing move. Maybe a little bit below there to give it a little bit more room, and then just let this thing run. But I think it's great. I think the setup.
I want to give the folks some context. The energy sector represents 2.8% of the entire S&P 500. 2.8%. Technology is 35%. Financials are 13%. Communications are 11%. Energy is 2.8% of the S&P 500. Okay. In the Dow Jones Industrial, 2.8% of the S&P. In the Dow, energy represents 1.9%. Financials are 27%. Tech is 20%. Industrials are 14%. Healthcare is 12%. Energy is 1.9% of the Dow Jones Industrial Average. And it gets worse. The energy sector represents 0.4% of the NASDAQ 100. 0.4%. Technology represents 54%. Communications 16%. Discretionary 12%. Healthcare 5%. Energy 0.4%. There is no exposure to energy in any of these major indexes. And I could keep going. But I think my point is that from a lack of positioning standpoint, yet alone the historic short interest by asset managers, but even without that, just the lack of ownership by the American investing public with a combination of home country bias and recency bias, OBS, right? Energy's up on a market cap weighted basis 80% since the summer of 2008, 80%. total return. The S&P 500, the technology, for example, in that period is up 1,500%, right? So the recency bias is off the charts here, completely off the charts. And
No, I love it.
That's set up for a squeeze.
It is so set up. And I mean, that's the thing that everybody's going to be pointing to. You know, everybody's going to be looking at the Mag 7 and these great returns and so on. It's the same thing that's happened this year, JC, you know, or sorry, last year now. We're talking about last year. Everybody's pointing to the S&P 500. Oh, technology did well. Yeah, it did pretty good. And then look at the spider sectors. They'd say, well, technology outperformed. Sure, that's correct as well. But why the hell are you not looking at all these other sectors inside of the S&P 500 or inside of basically our broad market inside the United States? If you're looking at XME, you're looking at gold miners, you're looking at these things that have had massive outperformance, ridiculous outperformance, the copper miners, and so on, aluminum stocks, steel stocks. These are all outperforming. But it also leads us to where, hey, when those outperform, we usually see energy outperform. It usually outperforms later. So I think we're here. You know, we've been waiting for it.
Now is later.
Yep, now is later. So I think, and there's another thing, JC, I've been looking at, which is the seasonality. You know, Sam and I have been talking about this a lot lately. The seasonality for energy, the best period of time is right now. Most people think it's the summer. That's actually not true. It's right now. So for me, it's like it's make or break point for energy. Either it's going to move here or probably not.
You know, this reminds me of some conversations you and I had over the last couple of years where gold was going. It's like, where's silver?
Yep.
Why is it silver going?
Yep.
Gold's going. Why isn't silver outperforming? And then holy shit, right?
And holy shit. Yeah.
And holy shit. Then it was like, where's platinum? Where's palladium? Why aren't these things going? Gold is going, silver's going. Where are the other? Holy shit.
Yep.
Right?
Yep.
And then it's like copper. Precious metals are going. Copper should be going too. Where's copper going to go? Oh, okay. Right.
Yep.
And then the whole time it was like, you know, it's like porn. You know it when you see it.
Yep.
Right? You know, right. So,
Yep.
right. You know what in energy, again, where's energy? You got precious metals going, you got base metals going. Where's energy? Why is it? Well, you know, when you see it, let's see it. Let's see it, right? Let's see it stick the landing this week. And I think that could be really powerful.
Yeah. No, I love it because that's exactly what we're looking for. It's not that I can say, hey, the energy is going to move for sure at this time. Like that's not what cycles do. It's, hey, we should be paying attention to it because the rest of these commodities are moving and energy is probably going to move at some point as well. So we're ready for it. I think it's happening right here, right now. Let's keep an eye on it, see how we shake out this week.
All right. So let's bring on the man, right? I mean, I don't know nothing about this stuff. Not my area of expertise. You know, Pers knows more than me. But, you know, Pers is a price guy. You know, Matt is our guy, boots on the ground. What the hell is going on? What does this matter to stocks, to commodities? How does this impact investors? How should we be thinking about it? Tell us things we don't know. Matt, bring them out. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Matt Warder.
How you doing, buddy? You hear me okay?
I hear you great, man. How are you?
Man, doing okay. I was hoping to be down in Florida and hanging out with a bunch of other folks in our industry, but the flight gods, they had other plans. So instead I'm hanging out with you, which is just fine.
Well, I'm you know, selfishly, I'm glad you missed your flight. So it's all right. We're cooler than those guys anyway. No, I'm just kidding. I'm friends with a bunch of people down there. Yeah. No, but you know, this morning I'm in the shower thinking about Matt Warder. You know, true story. I was like, what the hell is going on with Venezuela? I don't know what's going on. What does this mean for oil? I don't know anything about this stuff. Let's talk to the guy. Let's talk to the guy who does know. So I text Matt. I'm like, yo, come on the show. Tell us what the hell's going on. Can you please? And you're like, oh, I missed my flight. You didn't know what I was talking about. You thought I was down in Florida.
I did.
I'm like, no, man, come on the show. You're like, perfect, sweet. So I just want to let everyone know how incredibly grateful I am that Matt is here on the show, taking time out of your day. You are in for quite the treat, guys. He is the man. He's the guy we want to be talking to right now. Matt, fill us in. The hell's going on?
Well, good question. I mean, hell of a way to start off the year, right? Absolute chaos.
Well, you know, par for the course.
Yeah, that's right. Yep. You know, I think when I was on the show, you know, the beginning of the year last year, you were asking me if I had big ideas or those sorts of things. I kind of said, man, I don't know how the administration is going to play out. I think we kind of have to do what we learned how to do during the first Trump administration, which is just to take it as it comes. They're going to telegraph what it is that they're going to do, and then we react and position accordingly. And if you took that approach last year, you crushed it. I had a great, best year ever actually last year. Just being short into Liberation Day and then long afterwards was like one of the easiest turns you could make because it's right there in the headlines. He's telling you exactly what he's going to do. So, I think that approach this year is going to win the day as well. And so now
we got to fade us so hard. It was Matt's best year ever, Jason Purr's best year ever, Sean best year ever. Mine had to have been one of the best years ever. Strazza, I'm pretty sure best year ever. Like you fade us all day, right?
Yeah, pretty much.
Sustainable? Yeah. Is all this winning sustainable?
That's right. Do not confuse a bull market with brains. Like I try to be as smart as I can be, but we're going to get things wrong from time to time, and at some point in time, the market's going to take a turn for the sideways. That could be post Q1. We'll have to see. But with regard to Venezuela, the stupid play, the easiest thing to think about is like, well, what happens? We love to find situations, especially in commodity space, where the situation goes from terrible to less bad, and that's exactly what's happening in Venezuela. So, like, me, big smooth brain is like, well, and to be fair, I'm the worst fixed income analyst ever, but I think you got to look at Venezuelan bonds.
Fixed income is hard, bro.
Yeah, and I'm not an expert at it, but I think, just looking at like I pulled up the the 9.25 coupon 2027 bond, and it's already gone up from 25 to 40, and but you look back at where it was trading in 2008 or 2009, and it was at 120. So like, smooth brain is like Venezuelan bonds could be a multi-bagger if we move from, oh my God, the country's on the brink of collapse to holy shit, we might make it. And
right.
So that's sort of easy. As it pertains to oil, it does get a little bit more complicated. Like I've seen takes on Twitter that a bunch of, our friends who are real experts in oil and gas, and I'm a metals and mining guy. So I have to, caveat the oil and gas side is like,
well, you're also like a coal guy.
Yeah. It's like, I rely on a lot of other people for, data on oil and natural gas, but in general, like there are all these takes from generalists that are like, oh my God, Venezuela is going to turn on the taps. We're going to get 3-4 million barrels of oil. No, that's not what's going to happen. The things that I think unlock just right off the bat are Venezuela had this very contentious relationship with Guyana, and Guyana had these offshore concessions that was mostly like ExxonMobil. So I think that tension kind of goes away, and Exxon's going to be a net benefactor there. Chevron is an initial benefactor as well.
Why is Chevron? Why is the initial move since the news better for Chevron, much better for Chevron than it was than it was Exxon? Like, so for example, I know it's early, but Chevron is up. Chevron's up 4.5%.
Well, I mean, they can move oil to their own refiners, right? And they got the Hall Pass kind of in 2022, so they're ready to go in and operate. So they're just kind of Chevron and Exxon are kind of like the high level, just initial benefactors on rate of change. But like if we think about what needs to be done to actually bring Venezuelan production back to that level, I mean, it's not going to come on tomorrow. It's going to be years. Mm-hmm. And, really what's going to have to happen next is we're going to have to go in and invest in to rebuild the infrastructure in order for them to be able to produce. I think net for, just thinking not in terms of like, constitution or anything like that, just thinking in terms of geopolitics. Obviously it's a good outcome for the Venezuelan people, I think. And it's a sneaky good prospect for the American economy as well. We've been short diesel for a very long time. We need a heavier slate of crude that Venezuela produces to run into our refiners that will kind of ease inflationary pressure on the fuel side. We've seen the pullback in gasoline, but now I think, over the next 3 years or so, you could see it in diesel. So I think beyond, Chevron, Exxon, when you move down to the next level, it's like, well, the oil field services guys are going to be the next benefactor, right?
Yeah.
So
the price this morning is showing exactly that.
Yeah, so I think like, for me, I'm just going to buy the OIH because I don't have the granular expertise to go in and pick individual winners. I may find some over the course of time, but like, Halliburton, Schlumberger, Baker Hughes. I mean, the kind of typical, folks you would think of.
Schlumberger's up 8% today. Halliburton's up 7.5%.
Yeah, again, smooth brain play is by OIH. That's easy.
Yeah, no, the market agrees with you clearly.
Yeah, and then aside from that, maybe a sneaky one is fixing the production infrastructure is one thing, but you also got to get it to market. So you have to revitalize the pipelines. And I think it was Tenaris that built their pipeline infrastructure back in the day until they were nationalized in 2008, 2009, something like that. So maybe Tenaris is kind of a, third derivative there. Yeah. And that's, but that's as far as I can really think ahead right now. It's like we have to figure out who the best winner is amongst the oil field service providers. Chevron and Exxon, no brainer. You could probably make a, who has the assets in Trinidad? Is that Shell?
Oh, you're talking to the wrong guy, dude.
Yeah, I can't remember. I think Shell, maybe.
Well, what's interesting is that all these foreign companies are down. Shell's down 1% today, for example. British Petroleum is down 1.5%. You look at IMO, Imperial Oil in Canada, is down 4%. Petrobras is down 2.2%. So, like, why are the foreign ones doing well and the American ones doing great?
Well, I think the foreign ones are moving on, the potential price of oil coming down because we're going to increase production of heavy crude. Obviously, that's going to, create some relaxation in the, in the market. But again, it's not going to happen for like a couple of years or so. So, I think the near-term implications on, just general supply-demand balance in oil markets are probably overstated. And then, but
oil 1.3% this morning.
Yeah, so I don't know. Like short-term pin action, it kind of is what it is. If oil's up, then it's telling you, it doesn't really matter right now.
And what about the metals? The biggest moves are in the metals today. Copper up 4%, silver up 7%. You're looking at platinum up 6.6%, palladium 5.3%. Why are the biggest winners of all places in the metals market? Or does it have anything to do with this?
I don't think that has anything to do with with Venezuelan infrastructure in particular. I think just 2% of copper supply of global copper supply is offline at Grosberg. So you just went through my biggest conviction plays for for the coming year. Right.
So you think all these metals keep going in 26?
So yeah. There's going to be correction at some point in time. You didn't mention aluminum, did you?
I did not mention aluminum.
Oh, let's talk aluminum. I'd love to hear your.
Once you start getting into London metals, I start getting even dumber than I do in the American metals.
Oh God, I'm also the world's worst aluminum analyst. But historically, when copper gets up to these ridiculous prices, then people start thinking about substitutability, and then the next rung after that is aluminum. So. Seeing aluminum catch a bid. Century Aluminum, I don't know how much it's up here over the past month or so. That's kind of the high beta play in the space. There's Alcoa. It's pretty small. There are very few options. Norsk Hydro being another one. So you can't really, not a whole lot to do there. It's just like buy Alcoa and chill. If the price of aluminum.
That's a T-shirt. Buy Alcoa and chill. Right?
Again, for a lot of these things, especially if you're a generalist, you just kind of keep it simple, stupid, right?
Yep.
So just buy the liquid names that make sense. For me, it's like there's Alcoa, and then there's again the high beta play. If prices are really going to rip, then Century Aluminum should be the biggest, fastest mover, I should say. Not necessarily the biggest.
Also, the thing with aluminum that's interesting is if you look at, some of the countries, they're having they're also paying people for cans once again because they're having aluminum shortages in certain places. So it's really like an interesting time for aluminum going forward here.
Yeah, I try to spend the bare minimum of time thinking about aluminum and bauxite just in general, but because again, from an investment standpoint, there's not that much to do with it.
Few options. Yeah.
Yeah, it's kind of. It's a much bigger market than tin, But tin only has a couple of options really. It's it's like buy Alpha Min or buy Metals X. Those are your two options. But either way, if the price of aluminum is going to go up because of copper substitutability and the potential ratchet down of copper demand to switch over to aluminum, then it's going to be a benefactor here just in general. Man, I think the back half of this decade is just, it's going to be a commodity bonanza.
Are there any ADRs that we should have in? We talk about Alcoa. Last I checked, it was still an American company. But my biggest winners, correct me if I'm wrong, probably you too this year, Matt, are not U.S.-based companies. They're ADRs in freaking South Africa and in Canada and in other areas. Am I right?
I'm trying to think of what my biggest commodity
Chile, Peru.
But like I own Ivanhoe Mines, ticker on the pink slips, IVPAF, copper producer in the Congo. They also had their own production issue last year.
Shout out Congo.
Yeah, at Kamoa Kakula, they had a mining issue there. Had to shut down production for a bit, but they're inflecting both on copper price and on the rate of change of production. So I think they're going to be a catch-up play this year. But even you can just play Freeport. Freeport's going to do the same thing once they bring Grasberg back online. I don't know whether that's going to be this year or next, but again, there's just easy things to do. And then when you get down into the small cap space, anybody who has a really good copper project that's on the exploration side and is putting out news, is drilling actively, they're all probably going to have pretty good years as well.
Freeport, you're getting copper and gold mostly. Or you're getting something else.
Yeah, copper and gold. That's kind of the big two there. But it's this year's going to be really good. You went through the PGMs. I think PGMs are going to follow through. Palladium is sort of interesting. My one caution there is if we do have Russia Ukraine sort of pause, then Russia produces a lot of palladium. So Norilsk or Nornickel or whatever they're called now is a huge producer of palladium. So the reentry of Russian palladium into global markets without sanctions would probably be a concern longer term. Platinum's just easier, I think. It's rarer than gold. There's really no substitute for it for diesel auto catalysts. And if we're thinking about its confluence with oil, if we're going to produce more diesel in a heavier crude slate over the next 3 years, then it should follow on that auto catalyst demand should be relatively healthy as well. I think platinum is a little bit safer than palladium just on that note alone.
Matt, if we're right and these oil and gas stocks go, and this is a major breakout, Gap and Go and Exxon, I don't know what's going to happen. This could fade by the end of the day, end of the week, who knows? But if it goes, we make a lot of money, terrific, in that particular trade, for that matter. Does that there's no guarantee in life, but does that mean bonds break down and rates go up with it? Because to me, that's what that means.
It's a good question. I think just in general that, the net effects of the one big beautiful law are going to put more money in the system, which should push up inflation, which should push up rates in and of itself. So I think it's more, in my mind, that's more the mechanism that's going to do it necessarily than oil. All those things at the high level, right? Whether we're talking.
Are you saying sell U.S. bonds, buy Venezuelan bonds? Is that what you're saying?
Probably, yeah. I
like it.
Okay. I've been telling readers at thecoaltrader.com or thecoaltrader.substack.com, for the past year, if you're looking for yield, buy Alliance Resource Limited Partners. The yield's 11%. Buy Yancoal down in Australia, that has a big yield because, in all honesty, you look at those balance sheets, they look a hell of a lot better than the U.S. government. So I think there's better places to chase yield than the United States. And the caveat to that would be if we get a reignition of inflation toward the middle of the year, which I think is almost a certainty. If commodity prices go up, that's inflation, right? We have to be long the things that inflate, and then we have to be, cognizant of any turn in terms of interest rates. The Fed's going to cut as soon as Powell, leaves, and we put whichever Kevin, whether it's Warsh or Hassett or the minion Kevin, in in the Fed chair. Well, they're going to cut short-term rates, so I think inflation is going to push up the long end.
Correct me if I'm wrong. Correct me if I'm wrong. Interest rates stopped going down as soon as the Fed started to cut rates, right? Do I have that right?
I think so. I think that's right.
All right. Just wanted to make sure we're all on the same page here.
Yeah, this is
real life, guys. This is real life.
This is a big macro year, right? You got to pay attention to what the broad market's doing, like what's spying.
Make macro sexy again, man.
Dude.
I mean, you are one sexy bastard. I mean, I see you, dog. I mean, we got to make macro sexy. Remember, all these nerds, all these permabear nerds have taken over macro, right? Like, we can't have that, man.
Well, it's I don't know whether it's going to be a bearish year or bullish year. I think it's probably bullish, at least for the first half. But like, you just have to pay attention to the market, to rates, to oil, to gold. Like, those are the big four signals right there. It's like a big four-headed monster, and the rate of change of those in particular, or let's just say precious metals in general, I think are going to be kind of the biggest roadmaps for us to navigate the near term. So like, if you understand rate sensitivity, across sectors, across factors, and you understand how the commodities are faring, you're probably set up to have a pretty good year. For me, like, I'm going to be long commodities. That's easy. I think there are a couple of my friend Peter Montes, if you follow him on Twitter, has a couple of interesting biotech ideas. There are some other themes that probably could emerge in the middle of the year, but for me, I think this is a year where I just got to stick to my expertise, and we're going to.
Can I be the bad guy? Can I be the bad guy?
Sure.
I'll play bad cop here. All right, let's flip that on its head and let's say all that is wrong. We're completely full of shit, and it's going to do the opposite, right?
Mm-hmm.
So, in the scenario where everything we say we just talked about completely unravels and goes in the complete opposite direction, which is entirely possible. None of us here know what's going to happen, right? So we got that going for us, and we're fully aware of that. So, if not to overthink the intermarket analysis, but let's do that because I can't think of two guys that I'd rather do this with than you two. Dollar breaks out above 1, right? Above 100 on the dollar index, right? That you're going to get metals breaking down. You're going to get oil breaking down. You're going to get bonds breaking out, and you're getting stocks down in that environment.
Yeah. And the defensives will tell us, I think.
And the defenses will tell us, no doubt, no question. I love you so much, man.
Yeah.
Yes, the defenses will tell us, correct. But that's the scenario. That's the opposite scenario of what we're describing. Dollar above 100, metals down, copper down, energy breaks down. This is a failed breakout. This is a sell the news, like Juju or Yuhu was saying before, right? Dollars going higher. Forex currencies are selling off. Emerging market stocks are getting fucking smoked, right? That's the opposite scenario. And defensives, I think, will tell us good call, man. Yeah.
Yeah. So, like, I mean, if you put together a sheet that just has, individual commodities, rates, the dollar, broad market indices, and then you just look at it on a 1 week, 1 month, 3 month, half year, full year basis or something like that. When things start to flip from green to red, that's your kind of signal to, like, stay frosty. And that's
all right. So long energy, quick to the trigger, tight stops here. That's
I think energy.
We'll know soon. If it fails, we're going to know soon. So
I think energy is a little bit more complicated this year because we're going to have kind of bullish U.S. domestic gas, bearish international gas, bearish LNG as we start to export. LNG
but are you just staying in your own lane a little bit more?
I'm doing the metals. Like, the metals, I think, are easier for me this year. But you mentioned Petrobras being down. I think Petrobras is probably a winner over the longer term. I've owned that for years. I don't own it in size right now, but it's interesting to me.
Getting smoked today, dude.
Yeah. So that's one that I probably kick the tires on. Solid.
Do you like because you like Brazil or the company specific?
Yeah, I think Brazil still has a ways to go. I think Brazil is one of the few economies in the world that is inflecting in the right direction.
And if copper's going to go, if gold is going to go, and if energy is going to go, I mean, that screams Latin America and Brazil.
Yeah,
right?
It does. So I think that's kind of where my mind is. First off, Brazil was a sizable exposure of mine last year. I think that sticks around. But But again, long copper, long PGMs. This is the year that coal inflects too. So we should have a shakeout in Q2 as Chinese steel exports have their last shakeout. And we should see coal stocks, which have already.
You're the coal guy, right? So,
Yeah.
so Matt is our resident coal guy, right? I don't have any coal guys. You are. You're
Yeah, it's pretty much just me and not many other folks.
Yeah. It's just you talking to yourself, which is fantastic. I love it.
Yeah.
There's nothing wrong with that, by the way.
I sent out a note to my subscribers at thecoaltrader.com to come on over here and watch. So shout out to all those folks. But I think this is the year.
Folks.
Yeah, I think this is the year that really the whole sector kind of as a whole.
Okay, so which one are we buying? Which one? They're all little guys. They're all little.
For me, the easiest long right now I think is Core Natural Resources in the U.S.
I like that
because you get two things. First of all, you get the buyback program, and they have the lowest cost thermal coal complex in the country at Pennsylvania Mining Complex, just north of where I grew up.
Shout out Pennsylvania.
Southwestern PA. Go Steelers.
Big win.
It was we're happy to get it. We'll just put it that way. Just like in the stock market game, we're happy to get the wins that we get. Core. So mostly this year, I think the turn is going to be seen in metallurgical coal. We've already seen it to some degree. I think Q2 we probably get a little bit of a sell off, and then
Here's someone. That one is
CNR.
No.
What's that?
I was thinking you were thinking about Alpha Metallurgical AMR. You're talking about CNR. Yeah. What about AMR?
AMR is going to be solid too. I mean, if we have a year where international prices stay in the low 200 range, then AMR should have a good year as well. So, but the trick is prices have to stay up there. I'm not sure they're going to do that in Q2, but in Q3 when India gets going in earnest, they have trade cases in both coke and steel pending against China. To the extent that they're going to start to rely on their own production, that's going to be a net positive. And then don't sleep on Ukraine either. If we get a pause in the Russia-Ukraine war, well, we're going to have to rebuild it. That's going to take a lot of steel. And so I think the coking coal guys, which would be Core Natural Resources, Alpha Metallurgical Resources.
When are we going to be able to trade Russia again?
Your guess is as good as mine. That is above my pay grade, sir.
I missed the RSX, man.
Any thoughts?
I mean, for me, when they went dark, I was dabbling in Nornickel. Like that's the one that I probably want to own.
Nornickel?
Norilsk, Nornickel. They produce nickel and palladium and other things for them. But that's the one that I want to look at. I think sanctions on the oil side for them rolling off would be probably short-term negative. But obviously the rate of change of those Russian stocks will be
because the ruble's done well, and all these ETFs are offline, so it's
they've been buying gold. They have a lot of gold. Their gold reserve offsets. I think they're U.S. dollar denominated debt at this point. So they've done I hate to give a shout out to Russia, but they've done a good job of managing the currency during the war.
The currency's done really well.
Yeah.
In a weak dollar environment, but still.
Yeah, and so how's the dollar going to fare? I mean, I think the dollar is going to weaken this year, but again, it'll tell us before I know anything. So
Harvin, they're saying JC not giving Jason any questions. Sorry, guilty. Whenever we have the best guests, I just take over. Strazza,
no, it's fun. I love it. I was just listening to Matt, loving it. Like I'm just loving it because I agree with so much of what Matt's saying.
I'm the one that texted Matt this morning. I get to ask him a bunch of questions, and I'm asking the same questions that fucking Jason's gonna ask him anyway.
That's the damn truth.
Well, Matt, we'll let you run. Thank you so much for stopping by for a few minutes this morning.
My pleasure, guys.
Rather spontaneously.
Thank you, man. Appreciate you, man. Really.
Hey, no problem, man. If there's any follow up, obviously you guys just
dude, hell yeah, come back tomorrow. I can do this all night.
All right.
Don't do it all day too.
Let him go, JC. Let him go.
All right, go.
All right, see you guys.
All right, see you, Matt.
I got a good recess. Let's hit it.
You have a recess? All right, sure. We're doing a recess apparently. It's cool. I was gonna say, Jason, you've also been on for like almost an hour, so we appreciate that. But recess, let's go.
I'm always down to be here.
Where's my recess? What the hell? Okay, there we go. Jeez.
All right, throw up slide 2. This is the latest from The Economist magazine. Coming into the year, coming in hot. Right away, more gloom and doom from The Economist over in Britain. The angst over affordability, right? Nobody could afford anything. Stock market's at all-time highs. Everybody's making a ton of money, but no one can afford anything, apparently. So that's great to see. Somebody said, JC, when is JC buying The Economist? Let me tell you something. If there's ever a day where The Economist magazine is going bankrupt, I have the connections. I could raise the money. How much could it possibly cost, especially if they're going bankrupt? I will bankroll the whole thing. I'll raise the money. We'll get it done, or I'll pay for it myself. I don't know. It depends how much it is. We'll get it done, and then we'll make sure that we keep all of the people writing these things employed so that we have the data, right? I want to make sure that we keep the data. It's too good. I will do whatever I can. I promise.
All right. Well, we appreciate your service, JC, to a problem that does not yet exist. But
in that scenario, I will step up to the plate. I promise you guys.
Affordability is the early leader for the buzzword of 2026.
Ooh.
I stress early, but yeah. All right, my recess is going to be very simple. Registration is now open for Chart Summit 2026. It's actually going to be this week. This is the best free conference you'll ever be at in your life. Let me drop the link on the screen right now. I'll throw it on the chat. It starts on Friday, and then it's just a little bit on Friday, a couple hours, but then all day Saturday. We've got like 16 or 17 speakers lined up between Friday and Saturday, going all day, just telling you how to make money. The link is on the screen. Let's put it in the chat here again. There it is. And we haven't done a Chart Summit. I think it's been 2 years since our last one.
Yeah.
Maybe it was the end of 23. I don't remember anymore. But regardless, Chart Summit is back with a bang this week. Registration is open. You don't want to miss this.
Dude,
Friday.
The guests are off the charts. Katie Stockton, right? Ryan Dietrich,
Katie Stockton will be there. Ryan Dietrich will be there. John Netto will be there. David Lundgren will be there. Who am I forgetting? There's others that are on the list. Frank Capillari will be there. So it's 5:00 Eastern on Friday for a couple hours, and then all day 8:00 to 6 p.m. on Saturday. A full day of free education and content. And
I love that Chart Summit is back. I mean, this started in 2019. And we did it in the middle of COVID. We raised $250,000 for a nonprofit when we did Chart Summit in COVID. It was unbelievable. Everybody stepped up. You know, we did it a couple of years. You know, we kind of backed off as we were building Stock Market TV. The fact that Chart Summit is back, guys, selfishly, I freaking love it. You guys are in for quite the treat. It's going to be awesome.
Yeah. This week, this is the week. We were saving it for after the holidays, and here we are now after the holidays. So
what
Chart
a
Summit,
better way to start the year.
There is no better way to start the year.
It's gonna be a lot of fun.
Love it.
Is my screen share up? Is that working? There we go. Okay.
There we go.
Chart Summit. This is the week. No better week. No better time to do it there right now.
Yeah, and by the way, it will be recorded. So anybody who misses it, as long as you're signed up, you'll get all of the replays. So you're good.
Yes, it will be recorded. It is free. I don't know what else to say other than it will help you make money. So the link is on the screen.
One guy told me that he skipped Chinese New Year for Chart Summit.
There we go.
Because we did it, I think, in February. He's like, I just skipped Chinese New Year to hang out at Chart Summit. This is a guy at Goldman Sachs over in Hong Kong.
Nice.
All right, that was my recess. Jason, you got anything? How are the bees?
Hey, man, the bees are all dead. It's winter. Sadly, they're not around, man. They're just hibernating at the moment. They're just eating their own honey. Like the honeybees are still alive. Wasps, everything else, bumblebees, they're all dead. The queens are hibernating. It's a rough time for me, Spencer. It's a very rough time for me.
Sorry, I apologize.
Hope you can get through it.
I'm trying.
Yeah.
Chart Summit will help. And Miami.
Okay, good.
There's bees still in Miami, so that'll help.
Nice.
There you go. All right. Reminder, it's Monday. Chart Request Live, 1 o'clock Eastern Time. Send in your requests to questions@stockmarketmedia.com. And Alfonso and Sam will answer your questions on today's show. Kenny Glick going live at 11. Thank you for watching the morning show. Thank you to Jason and Matt Werder and everyone in the chat. We'll be back tomorrow morning, same time, same place. Thanks for watching. Go make some money.
YOLO responsibly.
Run it. I can't take no loss. I don't even know what it costs.